Welcome, entrepreneurs! Today, we're going to explore a powerful strategy that can help you reduce your tax burden while providing valuable work experience for your children. Hiring your children in your business. This approach offers a host of benefits, from tax savings to teaching your children the value of hard work. In this session, we'll cover how you can implement this strategy effectively, ensure compliance with IRS regulations, and maximize your deductions. By the end of this module, you'll understand how to leverage this tax-saving opportunity while giving your family a financial advantage. Let's begin with the benefits of hiring your children to work in your business. The IRS allows you to pay your children for legitimate work, and these wages are tax-deductible as a business expense. This reduces your business's overall taxable income, lowering the amount you owe in taxes. But that's not all. If your children are under 18 and you run a sole proprietorship or a partnership where both partners are parents, their wages are not subject to Social Security and Medicare taxes. This can result in substantial tax savings compared to hiring a non-family member. Here's an additional bonus. If your child's income is below the standard deduction for the year, they may not owe any federal income tax on their wages. This means you're essentially shifting income from your higher tax bracket to their lower or zero tax bracket. Let's take a real-life example to see how this works. John runs a small graphic design business and decides to hire his 15-year-old daughter to help with administrative tasks like data entry, filing, and organizing client files. John pays his daughter $12,000 for the year. Here's the tax-saving breakdown. The $12,000 he pays her is a business expense and reduces his business's taxable income by the same amount. Since his daughter's under 18 and John runs the business as a sole proprietorship, he doesn't have to pay Social Security or Medicare taxes on her wages, saving him an additional 15.3% in payroll taxes. Lastly, because her total income falls below the standard deduction of $13,850 for 2023, she doesn't owe any federal income tax on her earnings. In this example, John shifts $12,000 of income from his tax bracket to his daughter's lower bracket, resulting in significant tax savings for the family. To make this strategy effective, it's crucial that your children perform legitimate, age-appropriate tasks that contribute to your business. The IRS expects the work to be genuine and necessary, so it's important to assign roles that suit your children's skills and interests. Some common roles your children might take on include administrative tasks, filing, data entry, organizing documents; social media management, assisting with content creation, posting updates, or managing online engagement; marketing support, helping with campaigns, customer outreach, or even photography; inventory management, organizing stock, packing products, or shipping orders. By aligning their tasks with real business needs, you ensure compliance with IRS guidelines and substantiate the wages you pay. Once you've hired your children, the next step is to properly manage payroll. Just like with any other employee, you need to track hours worked and wages paid. Here's how to get started. Establish a payroll system. Whether you use accounting software or a simple spreadsheet, make sure you record your child's hours and the tasks they complete. You'll also need to issue them a W-2 form at the end of the year. Pay a reasonable wage. The IRS requires that the wages paid to your child be reasonable for the work performed. This means you can't pay them an exorbitant amount for menial tasks. Use comparable market rates to determine a fair wage. By setting up payroll correctly and keeping records of their work, you protect yourself in case of an IRS audit. Let's take another example to illustrate how hiring your children can benefit your business. Maria runs an online retail business and hires her 16-year-old son to manage her business's social media accounts. He's tech-savvy and enjoys creating content, so Maria pays him $8,000 for the year to help with social media strategy, posting, and engagement. Here's how this works. Maria's business deducts the $8,000 paid to her son as a business expense, lowering her taxable income. Since her son is under 18 and Maria operates her business as a single member LLC, she doesn't have to pay Social Security or Medicare taxes on his wages. Her son's income is below the standard deduction, so he won't owe any federal income tax on his earnings. This setup provides Maria with tax savings while also benefiting her son's financial future. The way this strategy is implemented varies depending on how your business is organized. Let's break down the key differences. Single member LLC or sole proprietorship. If you operate as a sole proprietor or single member LLC, hiring your children under 18 means their wages are exempt from Social Security and Medicare taxes. Additionally, the wages are fully deductible, reducing your taxable income. Multi-member LLC. In a multi-member LLC, the tax benefits differ slightly. If both partners are parents of the child, the wages are still exempt from Social Security and Medicare taxes. However, if only one parent is involved in the business, the rules may change and payroll taxes could apply. One way to avoid this is by setting up a family management company. Family management company strategy. In a multi-member LLC, you can establish a family management company that hires your children. By doing so, the management company pays your children's wages, and the LLC deducts these wages as a business expense. This strategy helps avoid payroll taxes, Social Security and Medicare, and shifts income to your children, who are likely in a lower tax bracket. As with any tax strategy, documentation is essential for compliance. Here's how to ensure you're following IRS guidelines. Keep accurate payroll records. Track the hours your child works and the tasks they perform. Maintain detailed records of their work to justify the wages you pay. Issue a W-2 form. At the end of the year, issue a W-2 form to your child, just as you would for any other employee. Reasonable wages. Ensure that the wages you pay are reasonable for the tasks performed. Paying your child above market rates for simple tasks could raise red flags with the IRS. By keeping accurate records and paying reasonable wages, you will protect yourself in the event of an audit. In conclusion, hiring your children in your business is a win-win strategy that provides valuable work experience for your kids while offering significant tax savings for your family. Here are the key takeaways. Paying your children is a tax-deductible business expense that reduces your taxable income. For children under 18, wages are exempt from Social Security and Medicare taxes if you operate a sole proprietorship or partnership where both partners are parents. Set up proper payroll systems, document their work, and ensure that wages are reasonable. Multi-member LLCs can benefit from setting up a family management company to save on payroll taxes and shift income to lower tax brackets. Thank you for joining me today, and I hope you now feel confident in using this tax strategy to benefit both your business and your family's financial future. Remember to consult with a tax professional to ensure you're optimizing this strategy and staying compliant with IRS regulations.